Welcome to The Explainer. Today, we are going to map out the entire financial world. I mean, from the actual cash in your wallet all the way up to these massive global institutions that basically run the show.
It seems like a pretty simple question, right? But the answer, well, it pulls back the curtain on this incredible structure right at the heart of our economy. And it really all boils down to two very different kinds of banks, each with a totally different job to do.
So on the one hand, you've got your commercial banks, the ones we all use every day, for our savings, our loans, our checking accounts. Their number one goal, making a profit. But then, on the other hand, you have this incredibly powerful central bank. Now, it doesn't deal with you and me directly, but it's the one overseeing everything. And its main goal isn't profit at all, it's stability. Okay, let's really get into this.
So, this whole relationship, between the profit-hungry banks we use and the stability-focused bank that keeps them in line, that right there is the foundation of the entire financial ecosystem. To really get how it works, let's start with the one we're all familiar with.
Right. So think of commercial banks as like the rivers and streams of this whole financial world. Their main job is just to keep money moving, to keep it circulating. They take deposits from folks who have some extra cash lying around, and then they lend it out to people or businesses who need it, maybe to buy a house, start a company, or build a factory. It's this constant circulation that actually fuels all the economic activity.
Okay, so now let's turn to the guardian of this whole system, the central bank. In India, for example, that's the Reserve Bank of India, the RBI. And its purpose is totally different. It's not there to make money. It exists for one reason: to keep the entire financial system healthy and, most importantly, stable. And its job, well, it's huge, but we can kind of break it down into four main jobs. First off, it's the only one that can actually issue currency. Second, it's basically the government's own personal bank. Third, it's the bank for all the other banks. And last but not least, it controls the total amount of credit floating around in the entire economy. A lot of power, right?
And when I say it's the banker to the government, that's not just some fancy title. No, the central bank is literally the government's financial manager. We're talking handling the state's bank accounts, managing its payments, issuing government bonds to raise cash, and even giving expert advice on all things money. It's pretty much the government's most trusted financial advisor.
And this next part, being the banker's bank, is absolutely crucial. Here's why. Imagine a commercial bank suddenly runs low on cash, and everyone starts rushing to pull their money out. That's a panic. Well, the central bank steps in. It acts as the lender of last resort. This one function, this safety net, is what prevents bank runs, stops financial panic in its tracks, and keeps the whole system from collapsing. It's a huge deal.
Okay, so stability is great, but an economy can't just be stable, right? It has to grow. You need to build industries, make farming better, get new businesses off the ground, and that's where a whole different group of players comes in. I like to think of them as the cultivators of the ecosystem, the ones planting the seeds for all that future growth. What's so cool about this timeline is that it basically tells the story of a country's economic journey. Look at it. It kicks off right after independence with a big push for heavy industry. Then you see the focus widen to include agriculture and rural development. And finally, the priority shifts again, this time to protecting investors and making the stock market safe. See? Each one of these institutions was created to solve a very specific problem of its time. And believe it or not, it gets even more specialized. You've got institutions just for helping small and medium businesses at the state level. You've got banks whose entire job is financing international trade. There are trusts designed to help everyday people with small savings, and even banks that give out tiny microloans to the smallest of small-time entrepreneurs. It's a whole world out there.
So, as economies get more complicated, well, so do the problems they face. But that's where human ingenuity comes in, right? This leads to some really clever new financial tools and institutions, what I'd call the innovators and the fixers of the modern financial world.
Okay, so here's a huge risk in any modern economy. What happens when tons of people or companies just can't pay back their loans? Well, those bad loans are called non-performing assets, or NPAs. And if you get too many of them piling up, they can literally cripple the banks that lent out the money in the first place.
The solution, you create something called a bad bank. And now, it's not a bank for bad guys. It's more like a specialized fixer. What it does is it takes over all those bad loans from the regular commercial banks. This lets the commercial banks clean up their act and get back to the business of lending. Meanwhile, the bad bank gets the tough job of trying to recover that money. Now, there's a whole debate here about moral hazard, like, does this encourage banks to be reckless? But at the end of the day, the goal is to stop the whole system from crashing down.
Now,
On the innovation side, you've got these different engines of growth. Take venture capital, or VC. They're kind of like the talent scouts of the economy. They hunt for promising young startups and inject them with the cash they need to explode, all on the bet that one of them is going to be the next big thing. And then you have hedge funds. These guys are more like the elite athletes of the financial world, using super complex strategies to try and score big returns for their investors, no matter what the market is doing. And finally, we have to remember that no country's financial system is an island. Not anymore. In today's world, everything is deeply connected to this massive, sprawling global network that moves trillions, with a T, of dollars every single day.
And these are the global giants that basically set the rules and provide the plumbing for all of that. You've got the World Bank, which funds big development projects. There's the IMF, which tries to make sure everyone's playing fair with currencies. You've even got the BIS, which is basically a bank for the central banks themselves. And then there's SWIFT. That's the secure messaging network that is the backbone for pretty much every international money transfer you can think of.
So you see, from your little local bank branch all the way up to a global messaging system, every single part plays a role. It's all connected. But to really wrap our heads around how it all works, we got to go back to those two pillars we started with, the ones holding this whole thing up.
All right, let's nail down these key differences one last time. Primary motive, profit versus stability. Core function, one takes deposits and lends money. The other issues currency and controls the system. Who do they serve? One deals directly with us, the public, while the other serves the government and the other banks. It's this fundamental contrast, this push and pull, that actually makes the whole system work. So what we're looking at is a complex living ecosystem. You've got your guardians, your cultivators, your fixers, your innovators, and the whole thing is designed to strike this really delicate balance between the rock-solid stability we all depend on and the dynamic growth we all need to move forward.
But this ecosystem is always evolving. The challenges are always changing. We're talking about everything from digital currencies to climate finance now. So that leaves us with a pretty big question, doesn't it? What kind of bank, what new institution are we going to need next? Thanks for joining this explainer.